All right, yeah, here we are, guys. We're going to dive a little bit deeper into our discussion about trading resources and a little bit of market structure, continuing our conversation that we started yesterday. Today, we're going to touch on routing. So a very, very crucial, very, very important part of trading, especially for momentum traders. You have to be able to find that liquidity before something runs, $2, $3, $4 against you, and you're unable to punch out. So we mentioned yesterday, we started talking a little bit about direct market access versus trading through an online kind of discount broker where it's actually the broker who's filling your trades and not going to the live market. With the emergence, though, of direct access trading, we have the ability to send markets directly to, send orders directly to the market, and that has created just a multitude of ways that you can route your order. So Sean is at the big screen. We're going to jump over to him in a second, but let's start this off, Sean, by just getting a basic definition of routing.
Guys, thanks, Brendan. Yeah, routing, you hit the nail on the head there. You can get, slipped, $3, $4, $5, or even a couple cents sometimes can make or break your day. So routing, a very important topic, and I'm proud to be doing this with you guys. Today, we'll focus mainly on the U.S. markets, primarily on the U.S. markets. There is so much more to talk about with MiFID II in Europe. Toronto has its own little rules as well, but today we'll focus on the U.S. Look, routing can not only affect the price you get, but also the speed of how you're trading and obviously the profitability. So very, very important. One thing to understand here is in the U.S., we have NMS regulations, and what that will mean is you cannot lock or cross the market. You have to get filled at the NBBO, the National Best Bid or Offer. Now, there are some destinations, of course, that have different rules where you can, they'll reprice your order back down, destination-specific rules for routing. But right now, let's just look quickly at this little chart here. It's not rocket science here, but this is the customer putting out the order. Brendan talked about direct market access. We have that, so we can actually specify which route we want to take. So we kind of miss this internal liquidity pool. We don't have to worry about that trading against another firm or our own firm taking fills. So what we're doing is we're trading it, we're putting it through the order routing engine, right? Then what's happening is we're checking dark pools, different stock exchanges. If there's a match, of course, we get filled and there's an execution, right? If there's not, and your order is IOC or fill or kill, then it will get sent back to you. Some order routes also will sit on an end destination. A great example of that is BATS, but we'll throw it back to Brendan. He's going to go over another exchange and we'll come back with some examples, guys.
Yeah, so great information, obviously. One of the things that we need to discuss, obviously, is going to be ATSs. Obviously, every ATS basically has the ability to route your order to some extent. So depending on what type of trader you are. Now, we spoke about momentum trading. That's obviously the most crucial part when it comes to routing, because you want to be able to have access to liquidity. If you're stuck in a momentum name that's very, very thinly traded, your order needs to be able to find where the liquidity is to ensure that you get out. So that being said, we have multiple different factors that are going to affect your decision process here. So let's touch, Sean, on a little bit about what are the factors that a trader should consider when they decide how to route their order.
Sure, yeah, great job there. And one thing we want to talk about here is the liquidity available. So that was the one thing, the first factor I want to talk about here, liquidity available. When you're looking at a stock right here like Siri, you can see one thing to take consideration. And again, this is a snapshot of what it was yesterday, not current price today. But when you're looking to say, you know what, where do I want to route my order? What I would always do is look to see on the level 2, which is right here, where are there big pools of liquidity? And what I see right down here, my eyes directly go to this little NASDAQ book there. So I already have a NASDAQ scan key set up. And what that NASDAQ scan key would do is look for all of, again, this is the NBBO, right? You see $6.12. It's going to first fire off here. But if I have 50,000 shares, for example, it's not going to hit these shares. It's going to hit these shares, but it's not going to fill my order completely. So what I'm looking to do is, where is there any kind of liquidity? Now this is a drastic example, but there's lots of liquidity down here at 605. So if I'm using a NASDAQ scan key, I know the destinations will swipe all the way down here, but because it's a NASDAQ scan, Brendan, it will stop here and hit all of these shares, no problem, and you don't actually lose that latency because it's already going to NASDAQ. So by the time your order swipes all down here, it would hit these NASDAQs. Another good thing to look at, of course, one thing here, maker-taker model. That's the one thing I want to talk to you guys about. If there are rebates available, as you can see right here, BossX and Edge A, those are taker fees. So you will get paid to execute against these guys. So what I would do in this situation is forget about routing. If I only have 100 shares, I can clearly see there's 100 shares here. I would pick an ECN or a gateway that would route to a trimmed out ECN fee. So there's batch trim, we'll have that in another slide. But right now, I would always focus on a low cost environment first if I can, and just to see if there's anything printing, you can always go to my favorite piece of software here. Oh, well, actually my favorite is a level 2, but second would be right here, the time and sales window. You can see queues are identified on the NASDAQ as a NASDAQ gateway. So these prints are coming off here, and you can see this is right at the end of the day. The market's actually closed when we take this. But look at some of these going through. Ks are Edge X's, but one thing my eye directly goes to, these Ys. Those are BAT Ys. So if you're looking to, again, use a routing engine, you may want to look at BAT Y, you may want to look at the time and sales to go. If we can throw actually to our next slide there, Karen, this is another example here. We look at something that's a little more opened up, right guys? So here you have Spotify. This is in the middle of the day. You can see NBBO, 13-cent spread. What kind of routing would I use in this situation? Well, guess what? I don't have the time and sales here, but I can guarantee you, you see on the show all the time, there are trades happening in between this, and you can get rebates, or you can aggressively go in and see about grabbing a few pennies better. Remember, fees are not always the big thing. Even if you get 20 cents per 100 shares, 1 penny is $1, right? So you're really looking in this situation when you're trading a stock like Spotify, I would use a routing engine that just goes after the biggest pool of liquidity. And NASDAQ Scan, again, one that I always use, but we have Dark MM, we have Speed Route, we have a bunch of different routing engines that will go out and search for dark pools. On a stock like Spotify, guys, I can guarantee you that there's something in between here where you're going to get filled. I think one more slide before we go back to Brendan. We should be able to talk one more piece here about what we're looking at. No, this is, we'll talk about order types when we get back, but let's throw back to Brendan.
So time of day, guys, is going to come into play here. That's probably the biggest factor when it comes to routing. So right at the open, you know, we always talk about how the market right at the open is so crazy, stocks are moving around, liquidity is all over the place. You have to be able to have your go-to key, and Sean touched on it a little bit. He likes to use that NASDAQ scan key, but I would even suggest having 1, 2, or even 3 different kind of routing keys that will guarantee you access to liquidity. So if you try one and for whatever reason it fails, you still have the ability to route your order and get out of a trade if you need be. So let's touch on a little bit more on some different routing keys. And these are keys, guys, that you want to be familiar with. You want to have them set up, not keys that you're going to use all the time, but in a go-to situation, you want to be able to, without a doubt and without having to think about it, know where your routing keys are, Sean.
Brendan, a fantastic throw there. We did talk about NASDAQ Scan. I do want to focus right now on a gateway that I know a lot of traders use. I use it as well. Me and Neil have these keys, so does Brendan, all set up. And a great point there. You don't always want to use one scanning key or one routing key. Always great to have 2 set up. The reason why I have BATs is I've noticed an increase, obviously, in the BYX gateway. So BATs, because they're owning that, they have a maker-taker model again. BYZ, I believe they call it. That's their BATs book. And BYX will give you those rebates. So again, this is P Pro 8. We're using that software right here. Check with your broker on how you can set up routing. They may not be too friendly about that, but with direct market access here, look at all of these destinations. This is a scroll bar, man. There's actually a lot more. This is a nice little order type that we talked about right here with the slim order type. What that one actually does, Brendan, is it goes after the low-cost venues, and we talked about that. So when I'm looking at something like Siri there, or something with a lot of liquidity, if you select right here, slim, and again, it's just sell short. You can go long, short, whatever. Definitely make sure you have both keys set up, but it's just a limit order. You can select slim. There's also trim. There's a bunch of different ones. I refer right now to our order reference guide. That's what it's called. And again, Dimitri can post that up on the IRC right now. You can see, I just call it, oh, it's BZX, sorry, not BZZ there, but BZX. You can see bats coming off with Z prints. It's a lit order type and it's slim. And if I switch over to this side, you can see here I highlighted a little bit of the key factors here when you're thinking about looking at this order reference guide. Look at this, routes to all markets while minimizing fees. Check, right? Blah, 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 blah. We go down here. Finally, the order returns to its originating exchange, right? So it's going to sit on bats. So that's where it's originating from, as you can see, originating from bats. So if you do miss the level, it will repost itself on the bats exchange where you can get a rebate. So if you do miss, and let's just say you have 5,000 shares and you go to punch out on a level, what happens is if you get 4,000 shares, you're probably going to pay the price. However, we're using slim, so we're going to look to minimize our fees. The difference is it will sit there at bat. So you may get a rebate on your last 1,000 shares. Brendan, that was a fantastic question, and I think that the more educated you are, I would spend right now 5, 10, 20 minutes order reference guide, have a look to see what else is available. Look, I know NASDAQ scan is a great one. We do have dark only keys. That might be something to look at as well. Dark only routing keys though, guys, will be probably one of the highest costs that you will incur when routing. However, it does once again scan all those dark keys. So on a stock like Spotify there, it's more important to get a better price than worrying about fees, while a stock like Siri, much more important to maybe use a routing key that does minimize your fees.
Trading here at Day Trade the World, we obviously have the benefit of basically endless ways to route an order and endless different order types. You know, it's very easy when you start and you sit down for the first time to set up your keyboard and just, you know, punch in the very basic order types, or maybe, you know, you look for some midpoints, you look for some LOCs or market on close type orders, and that's it. And then never go back to your keyboard setting, especially once you get used to it and once you memorize where all your keys are. It's very easy to kind of ignore the rest of the order types. But as Sean said, you know, spend some time, get used to using these order types that will route away from where you're sending the initial order, but then maybe come right back and sit on a BATS book, so you still have access to a credit if you are that type of a trader. Let's move on. Obviously, you know, not all the time is going to be it's going to be beneficial to route your order away from where you're actually sending it. What are some of the disadvantages now to order routing?
Great, yeah. Oh, I like this view. Good call. Oh, there we go. We switched it off. I liked it before. But yeah, so one of the key things to worry about here when you're talking about routing, yeah, you saw that diagram in the beginning. One important factor that we're going to be dealing with right here, guys, of course, is latency, right? And depending on which was the best way to go, I guess you can see here, you're going to sit here. Right? Financial trading strategies, that's us. We're using different routing. As you route, of course, it's got to go through your little chip here. So depending on the PC that you have, depending on where your orders are co-located, or sorry, the servers are co-located, how fast you can actually get to the exchanges that you're looking for. There you go. Stock Exchange 1, Stock Exchange 2. It still has to talk back and forth, right? So although it starts from your computer, it still goes down to servers, routes back and forth to these different exchanges. So that can actually cause a little bit of some problems here when you're talking about speed, right? We talked about that being one of our #1 issues, and you don't want to have slippage. So a lot of the times, sometimes it might be better if you see a gateway that you want to attack, like that example in Siri, it's almost better for me to send the order right to NASDAQ, so that way it goes right to their engine and they can fill you. You don't have to worry about talking back and forth. Look at this, guys. This is complexity. This was just a simple J&J trade that I pulled off, and as you can see here, the originating trade down here routes all to all these different venues here. So we put the word down complexity. You know, sometimes keep it simple, stupid is good. And this is another example. This was actually a GIF that started loading. It's not loading right now, but it just in and out, in and out, in and out. It actually goes back to Flash Boys with Brad Katsuyama there. What up, Laurier there? But you can see a lot of going in and out, a lot of front running can happen. So when you do use some of these dark pools and some of the order routing, it does put your order visible to a lot of the exchanges, guys. So as it goes back and forth, back and forth, back and forth, you can tick. We're talking milliseconds, nanoseconds here, back and forth from exchange to exchange to exchange. So a lot of the times you can have some complexity issues with routing. So, you know, if you're not an advanced trader and you're not sure about how order routing works, these are some good examples and some ideas to think about as you're trading here in the US markets. And like we talked about before, there's a whole different game in Europe. So right now, this is all that we really have to talk about for routing in the US markets, Brendan.
Yeah, absolutely. I mean, great information. You know, as Sean was saying, we have a whole different situation when it comes to routing orders over in Europe, another whole different situation when it comes to routing orders here in Canada. So we can do maybe another segment on order routing in those two areas coming up in the near future. But you know, I hope you guys learned a little bit there as far as order routing goes. You know, we talk a lot on the show about if you're trading a momentum type of stock that you know, you see a spread open up, as Sean was saying, to, you know, 5, 10, even 15 cents. And every time you post on a lit book, so you post an order to maybe try and get out on the offer on a lit venue, you'll just see algos jump in front of you and drive that spread right back down. So one of the ways you can kind of avoid that from happening is using order routing. So get familiar with some of the ways that you can route your orders to different venues to take advantage of some of that liquidity that's not lit and maybe sitting at the midpoint, as Sean was saying. So a little bit of a look there, guys, at routing. Obviously a very, very vast topic that we could dive even further into, and we will at a later date. But for now, we'll send it back over to the desk. Here's the guys.